Hey everyone, it is Julie here with TipRanks. In today's video, we're taking a look at 3 stocks that analysts from Goldman Sachs think have upside potential of about 50% or higher. Now, 2 of these companies actually just recently made their public debut to the market last month. They recently got an influx of analyst ratings yesterday, and at the end of May, both have their first earnings reports as a publicly traded company. So in today's video, we're going to take a closer look at what it is these companies do and what has analysts feeling so optimistic about their future. Just before we get into that, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Always make sure you're doing your own research and due diligence before making any investment decision. All right, with that being said, let's get right into these 3 companies. The first stock on our list today is DoubleVerify Holdings. They trade under the ticker DV and are currently just shy of $30 per share at $29.59. DoubleVerify is in the business of ensuring safety in the world of online advertising. The company offers a software platform for measurement and analytics in digital media, providing marketers with secure and accurate data to track campaigns and results. The goal: greater confidence in branding and customer reach. Their DoubleVerify Fraud Lab performs ongoing detection and analysis of new types of digital ad fraud in order to uncover the latest schemes as they occur. Through constant analysis, scenario management, and research, they pinpoint the sites, apps, and devices responsible for fraudulent activity, updating their protection in virtual real time. They also have DoubleVerify Semantic Science, which builds AI-driven ontological tools that facilitate the semantic understanding of text. This unique competency powers DoubleVerify's proprietary brand safety controls for advertisers and matches brands with appropriate and relevant online content. DoubleVerify has been in the digital ad business for over a decade, but like I mentioned, they just went public last month. Their IPO was initially priced at $27 per share, but they opened up at $35 and closed the day at $36. Overall, the company raised $350 million from their IPO before expenses. Following the quiet period after their IPO, we saw an influx of 11 analyst ratings all come in yesterday. And overall, the stock comes in as a moderate buy based on 8 buy ratings and 3 holds. The average price target is $39, which would be a 31% upside potential. Taking a look at our detailed list of those analyst forecasts, we have plenty of 5-star analysts rating the stock, which is always great to see. We do have a hold rating with the lowest price target of $30, and we have several analysts all agreeing on the $40 price target, which would be a 35% upside potential. The highest price target does come from Goldman Sachs analyst Christopher Merwin. His price target of $47 would be an upside potential of 58%. Discussing the DoubleVerify stock, he says that DoubleVerify grew revenue 75% year-over-year in 2019 and 34% year-over-year in 2020. The 2019 strength was driven by new product introduction, deepening integrations with major demand-side platforms, including The Trade Desk, Google, and Amazon, as well as competitive share gains. Given DoubleVerify's transaction-based revenue model, the company is dependent on sustained growth of the overall digital ad ecosystem. We estimate that a total of 141 trillion ad impressions across various digital channels as of 2020, growing to 184 trillion by 2023. Based on DV's current transaction fee ranging from 6 to 9 cents per 1,000 impressions, we estimate an overall total addressable market of $10 billion, growing to $14 billion by 2023. So lots of great future growth potential there. Now, the second stock we're taking a look at that is also fairly new to the market is Zymergen. Trading under the ticker ZY, they're currently priced at $36.87 per share. Zymergen describes itself as a biofacturing company. And by using the power of biology, they design, develop, and commercialize breakthrough products faster, cheaper, and greener than ever before. Their patented platform unlocks the greatest manufacturer of all, nature, and builds on advances in genomics, machine learning, and automation that enables them to pinpoint useful molecules in nature's vast catalog, produce them with biology, and scale them to market at the speed of digital age. This results in production in half the time and at a tenth of the cost of traditional methods, without energy-intensive processes, toxic chemicals, and massive infrastructure. Their focus areas include electronics, personal care, agriculture, and different emerging areas, with a big focus on electronics. One of their innovations in the electronic area is Hyalene, which is a family of breakthrough polyamide films that deliver a premier balance of properties. Each Hyalene film can be tuned to a unique combination of high transparency, high temperature resistance, and robust mechanical properties that give electronic manufacturers unprecedented design freedom. Now, Zymergen is another company that just went public near the end of April. They sold just over 16 million shares at $31 a piece, raising about $500 million. Zymergen's first quarterly report as a publicly traded company is coming up on May 24th, and I forgot to mention for DoubleVerify, their first earnings report as a publicly traded company is just the day after on May 25th. Just yesterday, Zymergen had 5 analysts initiate price targets for their stock, and it came in with 5 unanimous buy ratings. The average price target came in at $48.50 per share, which would be a 31% upside potential. The lowest comes from JP Morgan with a target of $40 for an 8.5% upside, and the highest comes from UBS with a $56 price target for 51% growth potential. The second highest price target came from Matthew Sykes at Goldman Sachs, who has an upside potential of 50%. He says that the key to the equity story for ZY is to first validate their synthetic biology development and platform through the successful commercial launch and shipments of their first product, Hyalene, in the first quarter of 2022. Subsequently, ZY will need to follow on with additional products in the electronic film space, effectively demonstrating the speed and scale at which they can develop and roll out products faster and cheaper than those made through the traditional petrochemical process. Demonstrating the value of the platform and diversifying their revenue base across multiple product lines and end markets will be key to establishing the sustainability and competitive advantages of the business model. Now, the third company that is favored by Goldman Sachs analysts has been on the market a bit longer, and that is Vivint Smart Homes. Trading under the ticker VVNT, they're currently at $13.33 per share. Vivint delivers home security systems and home automation services that include security cameras, doorbell cameras, and outdoor grounds cameras. Vivint boasts over 1.5 million customers in North America. Vivint recently reported their first quarter of 2021 earnings report, seeing solid year-over-year gains. They saw last year's positive momentum carry over into the first quarter of 2021, with strong demand across both of their sales channels. They're expecting a normal summer selling season as the economy reopens and states lift some of their quarantine restrictions. Their total subscribers was up nearly 160,000 year over year to 1.71 million. Their total revenue for the first quarter came in at $343.3 million, which was up 13% year over year, and their adjusted EBITDA came in up over 20% year over year at $162.1 million. The Vivint Smart Home stock does have 4 current analyst ratings, and it does come in as a strong buy based on 3 buy ratings and 1 hold. The average price target is $23 per share, which would be a 72% growth potential. However, you can see that the spread between some of our analyst price targets is quite wide. Our low price target comes in at $13 per share, which would actually be a couple percent downside, whereas on the high end, we have a $34 price target that just came in yesterday from JP Morgan, which would be a 155% upside potential. Coming in right in the middle of that range is Rod Hall from Goldman Sachs, whose price target would be an 80% growth potential from current prices. And he says that we believe Vivint's consumer financing partnerships position the company for sustained positive cash flow driven by reduced upfront subscriber acquisition cost outlays. We also see valuation as attractive at current levels, with a reverse DCF suggesting unlikely negative terminal growth assumptions embedded in the current stock price. Further, we see a potential entry into the insurance business as an option on additional value. So there are 3 stocks that Goldman Sachs analysts are seeing a lot of upside potential in. Now, I always love hearing from you guys, so make sure to leave your thoughts in the comments down below. What do you think of these 3 companies, and what is your favorite on the list? Now, please keep in mind that these videos are never a suggestion to buy or sell any specific stock. Please make sure you're doing your own research and due diligence before making any investment decision. If you made it all the way to the end of the video here, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Don't forget to stop by tomorrow morning for my pre-market morning update, where I'll get you up to speed with everything you need to know before the market opens. Thank you guys so much for watching. I hope you have a fantastic day, and we will see you back here next time.